Hello and welcome to the Stock Planner channel. Today I want to talk about whether it's more beneficial to buy the stock or to sell options or option spreads. Which are most bang for the buck? Buying the stock, shorting the stock, or option spreads? Before we do though, I want to tell you that the Stock Planner channel is an education channel and we'd like to share our ideas. I'm a swing trader and I take trades lately out 3 months because there's a lot of volatility in the market. I'm not a buy and hold person. Anyway, whatever kind of trader you are, swing trader, day trader, scalper, do your own due diligence, take your own responsibilities, learn your system, and then win. Do not try to trade other people's system. Let's get started. Before you start trading, you need to have a goal, and then you need to have a strategy to meet that goal, and then you have to apply some stocks to meet that goal. Warren Buffett does 20 to 24% consistently year over year, although lately I think he's having trouble, but around 20 to 24%. So I made that my goal. I want to do as good as Warren Buffett, the greatest trader or investor. Anyway, as a small trader, you could start out with as little as maybe $10,000. Trade options, you need between $5,000 and $10,000. I don't recommend taking $100 and trading options. You'll soon lose it. But in our case here, the starting bank is $10,000. I like this because if you have a bigger account like I do, I just take a multiply by, if you have 40,000, by 4. So if you start with $10,000 and can achieve the 24% APR, at the end of the year, you'll have $12,400. That's what Warren Buffett does. He's happy with that year on year, and he's in his 90s now. So what would that mean on a $10,000 account? I like free tools, and there's a free tool called outingcalculator.net, Future Value Calculator. Next 10 years, 12 months per year, we have $10,000. We're trying to achieve 6% per quarter, which 4 quarters will equal 24%. So that's 2% a month. And if you were to do any kind of money, you have to add some. I'll run this calculator without adding, and then I'll add the $400. You need to be constantly putting money in your account. Doing a calculation at 2%, and over the course of those 10 years, you'll end up with $107,000. Let's put some money in it. Let's say you can muster $100 a week. That's $400 a month. Now run the calculator. At the end of your 10 years, you'll now have $302,000. So if you're trying to make $500,000, you need to bump it up just a bit. Let's say we can achieve another half a point. Running the calculation, at the end of your 10 years, you now have your approximately $500,000, $500,000, and that's pretty good. And you'll have a skill at the end of that you can carry on for another 10 years. So that's a pretty lofty goal. I know when I first said to you about the 6% per quarter, you said, hey, I watch videos on YouTube where they're achieving that in one day, 1 minute. And lots of people are turning $10,000 into $100,000 within a few months. Yeah, you can try that. Tell me how it's working. But I've taken, and I've busted account as well by trying to do just that. I found out to be consistent, take it slow, take some stress off by trading longer term periods has helped me a lot. I can sleep at night, and I can also not trade for a day or two. So how do you do this 24%? Well, I went out and selected some stocks that are doing pretty well since January. I have a spreadsheet. I think the recession started in January, and so I picked stocks that did quite well this January on. I looked up the target on FinViz. I'll show you that in a minute. And then what I did, I didn't type all these in. I just typed the ticker names. I scraped FinViz for this number. And then I calculated, this is a year, this target price is for a year, and this is the percentage that I got. And for the year, according to FinViz's analysts, they're saying you can achieve, picking these 10 stocks, you get around 22%. I could have picked up better stocks or worse stocks, and you can do this easily as well. Creating a spreadsheet in order to select stocks for your watch list that can meet the goal that you set. My goal was 6% per quarter or 24%. I'm going to try to beat Warren Buffett. Walmart, they're saying it's trading at 128 and the target is 157. Let's go look at Walmart under FinViz. Well, that's going in the wrong direction, but now it's starting to go in. They had concern around the earnings. They predicted slower growth, I believe, if I remember right. And Target had the same price. There it is. So what I did was I scraped for that. To do that, you need a calculation and use the import HTML function. Sweet. I like the way I did that. So far I only had to input on this spreadsheet the name of my tickers. And there it is. Trading is so easy. All you have to do is go out in FinViz, find some stocks that the target price will meet your goal, take trades, sit back and wait 1 year, and you can achieve the same percentage of growth that Warren Buffett. Very easy. Except that doesn't work that way. Taking those same set of tickers that I used here and going back, this is current price, going back 90 days and seeing the percentage change for the last 90 days, and then assuming that that's the same percentage we'll have for the next 3 quarters, I came up with these annual percentage ranges for each of the stocks. In other words, I took the current price today, what it was before, 90 days behind, calculated the difference, and this is not going in a positive direction. It's dropping from its 90-day price. And if you add up all these, you're getting a total APR of 2%. So this didn't work out for the last 90 days, and if you project that for the entire year, 3 more quarters, you're not going to achieve the percentage rate that you need. And by the way, those same stocks, you can produce a win rate of 5 wins and 5 losses. Well, I just found a little mistake in my spreadsheet. This is the total APR for the year, and this is the added up APR for the quarter. So I need to take the calculation, multiplying it by 4, and we get the yearly APR, which is consistent with this and Warren Buffett's. 24 APR, 22 if I take the analyst's word for it, and what actually happens. And 8% is not bad, I don't think. With a win-loss of 5, that's 50%. So what we've done so far is we tried to achieve Warren Buffett's goal of 24%. We found some stocks using FinViz and the target price to see and achieve the APR. And this is based on the analyst's word. We don't know if they're always right or not. And then we did a test using data from the last 90 days to see how our picks performed. And they didn't do that well, but they didn't do that bad either. And we have still a winning system with a 5 and 5 win-loss ratio. Now this is buying or shorting the stock. Let's see if we can use options and see if we can top that. Using one of the stocks on our watch list, T-Mobile, and going 3 months out, which is a quarter, we're just under that, but it's a model, it's a ballpark model, and doing a bull put spread, which is a positive movement, which we think this will. We pick stocks that we want to buy during a recession or an inflation. This is one of them. And we find out that it costs us $500 to do this particular trade. So it's okay, because we're dealing with 1,000 blocks, so whatever we get as a credit, we just multiply that by 2. That's 277 goes in our pocket. This is the credit spread, goes in our pocket, and a max loss of 223. And you can see that the credit is more than the loss. They're really only risking $223 to do this trade to make 277. So if you had a 50-50 split or a coin toss, you still would have a winning system with the options. So if you hold this position to the expiration, you're going to get this last column. That's in August 19th, which is the max profit is 277. That is it if the stock price stays above $137. So if you hold it, in other words, set and forget, you're going to win $277 50% of the time, and you're going to lose 50% of the time. Let's plug in these numbers in our spreadsheet and see what it looks like. We're going to come back to this. This is a set and forget, and we take those numbers This is our max profit and our max loss. Our multiplier, well, you have to do it by 2. And if you take the max profit and divide it by the amount of money that we have invested, this would return. In other words, you have $500 and you get, if you win, $277. So that's a 118% return, which is really phenomenal. But your system doesn't do that. So here's your set and forget. The same numbers we have, but this time it's multiplied by 2. And if you use the win-loss rate, in other words, you win 5 and lost 5, you'll achieve $440, which is an APR of 17%. Now, that's good. And your bank goes to 11,760. You started out with 10,000, and that's a $1,760 profit. Not bad, just for a set and forget. But can we do better? Now, we're trying to get 6% per trade, and you want a win-loss rate of about 2 to 1. You set your stop loss at 3. Let's see what that looks like as far as numbers. Well, I don't see those numbers. But here is 6% right there. See the line? And if it gets to 6%, we'll get out of the trade. And just to say the average is in this area somewhere. I guess it'd be around $100. See it there? 6%, around $100. If you held it, it'd be 277 or 83. But let's just say an average is about $100. Let's take that and plug it in our system. Remember, it's only $500, so that's just going to be $200. And this is going to be about 60%, $60 loss. Let's see where that comes through. Yeah, somewhere in here, somewhere right in this area, average. And if you're 2 months in the trade and you're losing, you ought to think about getting out. Let's plug that number in our spreadsheet. And this is a model, and we're going to assume that we can do this for all the stocks. And you can. You can find an option spread trade that'll produce this kind of scenario. It's not that great anyway, which gives you at 50%. You win and lose. You win 5 and lose 5. It'll give you a profit of 1,600. 16%. That's easy to figure out, and that will be your total there. That's a 64% APR. Well, that's good. What's that telling us? This is the model, but what's it? If we take our profits at 6% and 3% stop loss, and we take them early, it's better than just holding out to the end, even though you will potentially win much more. Because if you got 5 winners at this, and 5 losers at this, and 5 winners at 277, you'll do better if you take your profit at a 2 to 1 ratio. And I'll just tell you what I do. I have my stop set at 12%, and I let it ride. And I have my profit target, which I take my profit at 20% or let it ride. In other words, if it hits 20%, I take my profit. And if it hits 12%, I take my loss. So my percentage is going to be somewhere in between here, because I'm doing a little of the profit taking. And remember, I use 12 and 20, or I set and forget, and we'll just hold it out. And so I did some back testing, and a lot of times this 20% will hit, based on the stocks I'm using, in about 18 to 20 days. So, there is a good amount, maybe 50%, and that's what it is. It's 48 to 50% that hit. And that's good odds. The other ones, let go, and you got a 50-50 chance of winning. So, this is good. Let's see if that beats Warren Buffett. It does. Taking the same $10,000 and going in and out and managing your trades will beat Warren. And this is at a 50-50 coin toss. So the key there is to manage your trades. Use a good risk reward. 50-50 is good enough. And if you have a strategy that gets you some singles that are good and last a long time, and that's what I have. I have a three indicator strategy that lasts the 60 days or more at about a 50% win rate. That means the stocks that are going in there last a long time, and they're good stocks. Those are not penny stocks. But with 4 wins and 6 losses, our $10,000 turns into $7,000, almost nearly $8,000, and that's a loss. But not much. It's only a 5%, or 23 over it up. 6%, 23%. There's the 5 wins. It should be the same as we got up here. And this is 6 wins. If you can come up with a strategy that gives you a little better, 6% win, 6 wins and 4 losses will give you $15,840, 58% APR. That definitely doubles Warren Buffett. Not easy to do because this type of strategy will hover around 50%. So the moral of the story is, manage. If you're going to do buy and hold for a year, and the analysts are correct, you'll do fine. But that's often not the case, and we have a recession and inflation right now, and that in the last 90 days hasn't been that great for a lot of stocks. But you still could do okay. It could be 8 or 9%, and well, that's not going to be enough for a lot of you people. Or you could take an option model approach where you can control more shares for less money. In both scenarios, where you set and forget, does nearly $12,000, or you manage your trade, either 3% stop loss or a 12% stop loss, or a 6% profit target, or a 20%. Swing for the fences. I've had a lot of luck with this kind of strategy, and I have had a lot of losses. But since I've been staying calm, cool, and collected, my winners have outpaced my losers, and I'm winning in this recession, inflation type period. Yes, I do not have a bull put spread put on that often. Lately, I've been having a lot of bear call spreads and broken wing butterflies. So let's put an APR of 17.6%. Now let's use 58%. And that is about 4.5 monthly rate. 4.5 monthly rate. Let's get rid of the period for just a moment and calculate. 2 million. That's without adding. And I'm not trying to be too optimistic on that, but it shows you one thing, is that you need to plan out your trades. You need to have a watch list that can achieve your goals. You need to know what you're shooting for. And I think you need to touch the data. You need to feel this data and understand it. This is why I'm not posting my spreadsheet. It's better for you to develop your own, and you can do this quite easily. All you have to do is have your stocks, you do your scrape, and you input what you think is your option model that all these other stocks can achieve. In other words, for Walmart or Kroger, or can you risk 500, have a net credit that's more than the loss 3 months out? And I say you can do it 1,000,000 times over. So what'll it be? Buy or short the stock? Do an option strategy where you set and forget? Or will you try to manage your trade? Is a 50-50 system, if your singles are producing singles that are accurate 50% of the time, is that good enough for you? Or do you need a system that needs 80% wins? With only a 60% win rate, you can achieve unreal results if you know how to use the options. Well, I hope you can leave your comments below. I'm hoping you're doing your own due diligence. I want to tell you about our free Discord, where it lists the overall trends of the stock and includes my watch list. Great place to start for trending and up, and stocks that are trending downward as well. It also lists the trade ideas for the RSI, the MACD, and the stochastic RSI, which is what I trade in my 3 indicator strategy. Also, my trading view settings are out there. And then also in Discord, for the price of a cup of coffee, I have a trade list of my 3 indicator strategy when they all 3 indicators, MACD, stochastic, and the RSI, all align with each other. I call that the 3 indicator strategy, and it produces good signals that last a long time. I have a trade list, a daily trade list, that shows the open positions, closed, new positions, and when to scale in. Scaling in when you have a winning trade is very, very important for profit. And likewise, it shows you out there's a listing that shows the profit, current profit. It's a great place to start. It's not a place to finish, because while you're using our Discord, you should be developing your own system. And that's the only way you're really going to win. Anyway, do your own due diligence. Take responsibility for your trade. learn it, and win. Happy trading. Catch you on the flip.